Hi, uh, hello everyone, and welcome back. So it's been quite a bit of time before I did this video, but it can't be more important than now to do this video. I have a very important market-related knowledge that I need to tell right now, and I have some important things to discuss today. So let's discuss them right now without wasting any more time. So, by the way, as you know, or if you don't know, I mean, if you're trading in the markets, you should definitely know this that there is something called exit polls that are coming out this Sunday. Okay, so how to trade before exit polls and how to trade after exit polls. So these are two different questions, correct? So these are two things that we need to incorporate. So first, let us watch out for the first question in this video. Okay. So let's see how to actually deal with the first question. That is how to trade before elections. Okay. So first of all, in order to understand this, you need to have an understanding of how the basic candles work and how the moving averages and the price action works. So if you don't know any of this, I would say you watch the Applied Trading Basics series first, where I have discussed about basics of candles, and also I'll be uploading more and more videos soon as well. You can go there and then come back to it. Okay. Anyway, before that, let us first concentrate on this thing first. So now, if you see, so this is the Nifty chart of 1 day. Okay. So what happened in the Nifty? So there has been a continuous fall of around 9 days. 1, 2, 3, 4, 5, 6, 7, 8, maybe eight. Okay, including this because this was a red candle. So you can say that 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 red days in a row, which means basically on all these days we have closed below the opening price. That's the only thing. Okay. So, okay. So now what happens is the important thing that you need to know whenever there is an event. So here we have this elections is an event which comes once in 5 years. Correct. So this is not a small event by any stretch of imagination. So now, whenever you have an event, the first thing that you need to know is market always positions itself according to one set of result that it is expecting. So this is a very important sentence. I'll once again repeat: market always positions itself, assuming that there is a result on either of the direction, on one of the direction. Okay, so this is very important. So therefore, what that means is, so in general, what happens is, let's say you had a very big fall before the event. The event is coming, and the event is still there. So right now, okay, now we are on 17th May 2019. Let me take this directly. 17th May 2019. So exit polls are on a Sunday, 19th. So Monday, by the time market opens, it has to open knowing what the result of the, I mean, after knowing the result. So it will react. So it will react to the result on 20th, which you can't do much about it because this is not the thing where you can trade because you never know what the result is and what it's going to come up to be on 20th, right? That is difficult to guess. It's anybody's guess, correct? And this is, by the way, only the Anyway, this is only exit polls. Correct. So, what happens is, just give me a minute. Sorry for that. So, okay. So, what happens? So, now we have 11,158 was the kind of low. Maybe it hit around 11,120. Okay. So, let's see what happened. So, what we were discussing, that before an event, there is no point estimating what the event result would be. Correct. That's like a sheer guess, which you can do in anything. Correct. So instead of that, what we are looking at is this positioning before the event can be done. That is pretty much easier, actually. So what is happening is that how you can notice is, so let's say you have the 17th of May, right? So now what happened? So till the last 2 days, there won't be any clear positioning that happens for that event. Okay. So till before that time, whatever how the market was moving, it generally that movement stops and there will be the movement other way. So this is the way it goes. So basically, what happens? So here there was a nice fall happening, and this was due to several reasons like global reasons, and there were several trade war talks. All this were happening. So during this time, nothing about election, this event matters. It just goes in the direction of whatever the trades, I mean, the situation around the world is without considering this event. Okay, so it was falling nicely, and there was once again, even on this day, there was a very good fall. By this time, in general, what is the thing that people estimate is that it's very, very close to 200-day moving average, right? That's the thing. And 200-day moving average, if you don't know, it's one of the most important moving averages. And it's true as well, and it is the kind of thing which has to hold. So almost it should, so it's almost there, so it will go to 200-day moving average and then bounce back. This is the general thing, but as I always say, what everyone thinks in the market never happens, seldom happens, at least. Not, I'll not say never, at least seldom happens. So therefore, what has happened, it has almost tried to break this of a low of on 13th May. 13th May is Monday, correct? So 13th May is Monday. So it tried to break this low 1, 2, 3 days. Okay. And on all the fourth day also it tried. So on all these days, it touched that low, went a little below, but it never was able to break it sustainably. So that is because, so till here, I mean, so this is the best thing. Like 15th May, if you see, that was a good red day, right? 15th May. 13th and 14th, yeah, you could say there was a huge fall. And so 13th is this day, 14th is this day. There was a huge fall. And so it was kind of uh, consolidating kind of thing. So 13th was a huge fall day, right? And 14th, it tried to move up, but then wasn't able to. And then 15th, it actually fell off from 11,280 to 11,163. Correct. So this is what happened. And after that, this is when most people would have estimated it to go down. Correct. Because it's already touched this low and came back and then fell off. But there comes the importance of the event. So now you have an event. So now if you keep falling like this, then there is a chance that, I mean, the event, what if the event is very good? Like the exit polls turns out to be a good result for BJP, which is what the market is kind of expecting, right? So there is always one thing, that expectation that always will be there in the market. and the initial reaction is always will be based on how the result of that expectation panned out. So so because of that this thing, so now it wants to be on the safe side, so it doesn't want to go too far down nor too far, right? Now anyway it has fallen down, so it has fallen down quite a lot, 9 days of fall, and there is no. So now what has to happen? There is, I mean, in very near future, there should be some bounce that has to definitely happen. Okay, so this is the simple idea. So this is a very basic thing. Whenever there is a huge lot of fall, there is always an equivalent bounce that happens, which will be of good strength. Correct. And the important thing is to catch when the bounce occurs. So it has to have a reason for that bounce, and there is no good better reason than this event of election. I mean, this event to take that bounce. And so what happened? Here it is. On the next day, that is on 16th May, from 16th to and 17th, there was a good rally yesterday, and followed it up by again today. There is another good rally. Right. So this is important. This is the important thing in price action, and you should not always blindly base your trades on moving averages and stuff. So these are some of the important things to look at. Correct. So that is the idea. So if you see, now let's do the 15-minute chart. So if you see in the 15-minute chart or even the 10-minute chart, so this is a beautiful thing that was happening. So in 10 minutes chart, so initially the first time there was a short covering rally was when it hit 11,114. It was too oversold. Okay, and it rallied like anything to 290 on that day till 235. And what happened from 2:30? It just fell off again to 3 o'clock. Again tried. And then it was kind of two times it tried to cross over this 200-day moving average. And again, the third time it tried to cross over and it failed. And hence it fell off again. Okay. So it was almost coming back to these levels. But here the time is 3:15. That is the end of the day on 15th May. 15th May is 2 days back. So now on 16th May, it tried just spent some time accumulating here, and this is when the people, the big people, are building the um, positions for the what do you say, the event. Okay, so this is where you should take your trade. And I have taken around these places where it has taken again some support. It will always, the first part will be slightly slower because there you are not sure about what is going to happen. Okay, so it needs some more strength before, because there are a lot of falls and there are a lot of false things, false breakouts. So, and when the next time it was able to, this time it still again fell off, but then bounced, and how beautifully bounced back. And if you see even in the 15-minute chart, you can see that it tried at 2:30 to scare. Yesterday was also an expiry day for the Nifty, so that was the best chance to make some big moves in this way, and it used that superbly. Okay, so that's when so this is the place where around this I have taken some positions in Nifty as well. So if you could see here, so I have bought it, the Nifty futures are around 11,220. Correct. So this I have converted it into MIS today. So but uh, obviously today it didn't even open at 11,220, so you can't expect it to be there. So therefore, I have taken the position some 2 days back. So this is the beautiful thing that you can do. Okay, before it's not that I'm getting the profits on this, but this is one important thing that you can know that would help you in understanding how to trade before any key events. Now later, I would upload a video as to how what to do after the event, but for now this is the important thing. So they always remember, the most important thing of this video is to know that there is always one side that the market takes before, and that side would be mostly based on um, what I mean, what was happening before those 2 days. Okay, so that's the thing. Hope you get some good, useful information with this video. And if you like this video, do hit the like button and subscribe to my channel for more updates and more important updates regarding this kind of stuff. Okay. And if you want to check out the basics of trading and videos, and only in the applied fashion, not in the regular fashion, you can definitely check out my applied trading basics videos as well. Have a good day, and let's see how the election goes. I am not anticipating what's happening. I am using the event concepts of price action in the market, and this is what you should do always. This is a very, very good way to mint some good money. Cool. Thanks, guys. Thanks, everyone. And bye bye. Have a great day.